Please give me a moment while I connect to Facebook. We'll be getting started shortly. Hope you're doing well. And I think we should be live on Facebook. Hi everybody. Welcome to another video. I'm Sami Abustad, Director of Education at T3 Live. We are going to do what we always do, which is go over the charts, go over some swing ideas for next week, go over the market, and see what we can find for next week. But before we start, as always, a standard required disclaimer to let you know that trading is risky and that whatever we discuss is for educational purposes only. If you'd like to download a copy of my free ebook, link for that is in the description below the video. Also, you'll find that I copied and pasted the watch list for you in the description, so feel free to copy that and paste it into your watch list, and let's go over it together. If you find benefit in today's video, I would appreciate it if you hit the like button. That helps support our channel, whether you're on YouTube or Facebook, doesn't matter. Without further ado, let's dive in. Let's get right into it. Of course, I said last week the market is bearish, and I think we're headed for a recession, but doesn't matter. What matters right now is technical analysis, and technical analysis tells us also that the market is bearish. We broke down on the most bearish day. I kept saying in the room on Thursday that perhaps Thursday, I'm not talking about this red bar, Thursday's bar, this red bar, was probably the single most bearish day I've ever seen. Only because, not because of how big it is or because we broke down, no. Only because that's when Tesla was up 10-11% at the open, okay? And got sold. Apple was up. Every single big name was up. Apple was up, I don't know how much. At least it shot up after the open. Every big name was up a lot, and yet the market still sold off hard and ended up breaking down badly. So I just was really surprised at how bearish the market was on Thursday, because with Tesla reporting earnings and going up 10% or so, I was really surprised. Of course, I took the SQQ short and long, that is, which is the triple leveraged Qs, and it's doing incredibly well. And I also have called it in the newsletter too, the TZA long, which is the triple leverage ETF for the IWM. So it's not like I was, I reacted quickly, but the point is Thursday, this is Thursday, okay? This is Thursday's bar at the open. And like I said, Tesla was up 10%, and yet the market crashed and turned into a power downtrend. Look at that. So I thought Thursday's bar was one of the most bearish days I've ever seen personally, and we followed through on Friday, and now we're almost at the March-February lows, and I'm pretty sure we will end up breaking under those lows, if not next week, the week after or so, and then we're headed after that probably to about $300, the next stop. In a downtrend, which is what we have right now. This was an uptrend, right? This is now a downtrend. In a downtrend, support is meant to be broken, okay? Support always gets broken because that's the definition of a downtrend: lower lows and lower highs. So this will probably get broken, and then the next stop after that will be about $300, and then after that we would have to probably look at the weekly chart, which I would suspect would be the 200 MA is the next eventual stop on the Qs. And as you can see, it's close to 250, not quite 250, but that will probably be the resting place for the Qs, or the final stop, or who knows. But for now, the market is bearish. I'm expecting, of course, the monthly buy setup. I'm using a new ergonomic keyboard, and it's driving me nuts. Yes, I have to look. Normally, I don't even have to look at the keyboard when I'm punching in numbers or typing stuff in, but now because I just started using it, I'm having to look a lot. So the monthly buy setup will probably fail. Okay, and then eventually, as I said, next stop maybe 300, and then after that, so the top of the base is the next stop probably. After we break the March, February lows, after we break here, the next stop will be 300, and then after that probably 250. Now, do we go all the way back down to here? Do we go? Maybe, but we'll find out. We'll find out as we get going. Okay, but for now, the bias for me is all out bearish, and as I said, I have the TZA, which is the IWM, and I have the SQQ, which is the Qs, but inverse, obviously. I talked about the IWM last week on the 1, 2, 3. I talked about it in last week's video. Triggered, so it's pretty good if you got it. All right, now on to the ideas. Truth be told, we don't have a lot of good bullish charts, and the bearish charts, I mean, for them, they're not too late. There's a lot of good looking charts, but timing with the market is a little bit late because the market dropped a lot already, the last 2 days at least. So that's the issue. We have, I think I have 10 shorts open in the newsletter, 10 short positions. And then I noticed that one other thing before I get into the watch list, before I start going over the watch list, I noticed that a lot of the long-term plays in the newsletter started to get hit. The longs, I mean, that I picked for the, because they're defensive. KHC, right? So got hit on Friday. Now it actually, we exited on Thursday, so that was in best trades, I mean, in a while, probably. But I noticed they started getting hit. MO, got hit. Okay, what else got hit that's supposed to be consumer defensive? I mean, oil got hit, commodity stocks got hit. I don't have the FCX, but copper got hit, aluminum got hit, Alcoa, right? Why is that? You might be wondering, why is it that even defensive stocks, even stocks that have had a negative correlation to the market, meaning they've been going up as the market dropped, why did they start to get hit? And the answer to that is in a recession. We're not in a recession yet at all, but don't forget, the market is the greatest discounting mechanism we have in the world, meaning the market discounts prices immediately as new information becomes available. And I think the market is already discounting the possibility of a recession. And with that said, even consumer defensive stocks, even commodity stocks, even metals, they will also get hit because prices in a recession go down. Okay, even what normally is supposed to be recession proof almost. So that's why they started to get hit, because I think it finally kind of dawned onto traders and investors that, wow, the market, let's switch back to the charts, the market is finally really going. And so they started to get hit too. So just an observation, and I thought I would share it with you, because a couple of people were wondering why they started to get hit, even those, again, what's supposed to be recession proof or defensive stocks. All right, CTIC. The bullishness on CTIC is undeniable. I mean, this is really bullish. Look at that stock, unbelievable. So I like it a lot. I just want to find a way in it. There isn't a good entry right now, but I like the CTIC as a great watch. Notice how this bullish move all started. It started from a tier 1 professional gap that gapped over flat 200 and cleared 3 months worth of resistance. So that was the igniting move. See it? That gap over a big red bar. Everybody that shorted that day was trapped the next day when the price gapped up, when the stock gapped up. And now it still looks higher. It's incredible. I'd love to find a way in it, but doesn't have an exact entry. There is a little bit of an entry right here, stop down here, or over the prior high, stop down here, but you know, it's not the best entry I've ever seen, but it is the best stock out there that I'm aware of in terms of the bullishness. I like the DCPH also. Nice hourly base breakout. So over 1061 or so. Stop down here, which is excuse me, at 969. So it's about $1 stop, and target about 18 bucks. The 200 MA on the daily chart. So I like it. So it's DCPH. Better entry, not as bullish as the CTIC. GNS, I don't really like it that much. I probably just like the hourly chart a bit. Don't like it that much. GOGO is going to have a daily buy setup, though GOGO went a little bit climactic. And normally when a stock goes climactic to the upside, the first buy setup fails. So be careful. But over the prior bar's high, stop under the prior bar's low. So over 2180 by 2070, 77. It's a $1 stop long. I like the LYRA also. That's not bad. It's a daily buy setup over 595. Stop under 530. Target, I would say 750 or so up here. Wouldn't expect it to go all the way up to $8. Not bad. Not bad. LYRA. REE is a transition A on the daily chart, similar to the DCPH. This one. Okay, so these two are similar. I like this over the base. Okay, like it a lot. Stop right here. Target 1, and then target 2, maybe the bottom of that base or the declining 20 on the weekly chart, whichever comes first. Okay, so I also like the REE. Next on the list is SAVE. SAVE is about to get bought, so I'm not sure it's gonna move. In the newsletter we have the ALL. I'm sorry, not AL. What is it? American Airlines. American Airlines. AL, is that right? Yeah. Jeez, hold on just one sec. What's American Airlines? Why am I drawing a blank? Hold on, I'll take a look. My account. It is. I can't believe I forgot. AAL. And notice they got hit too. I mean, on the airlines on Thursday and Friday a little bit, but SAVE. Right, so all the airlines look good long term. I like the UAL a lot too, but it's up a lot. So all the airlines look decent, but the SAVE has the setup. The other ones don't have a setup now because it's too late. The only issue with SAVE is it might not move because there's already an offer for it to get bought. So I don't know if it's gonna move or not, but otherwise long right here, stop right there on the SAVE. SST, SST not so good, but look at the hourly chart. It's an hourly base breakout, so SST would be long over the base, stop under it. Okay, and then last but not least, Twitter. I have a small position in Twitter. It's a kind of a gamble because it might get bought, it might not. So if let's say Elon Musk withdraws his bid to buy it, then it'll probably gap down and I'll get hurt a little bit. So I don't have that big of a position, but I think it's likely that other people will also get interested and pursue Twitter. So I do have a position in it, but it still looks higher. It's not too late. Okay, on Twitter. So as you can see, the list isn't very good. I like the relative strength on the CTIC the most. I like the setup on DCPH. I like the setup on LYRA, and I like the setup on REE. Twitter is the riskiest of the bunch because it could either get bought or not bought, in which case it'll probably get gap down. So those are kind of my favorite from the bullish list. Bearish list, we have a lot, but as I said, we already have about 10 positions open, so it's a little late to get started, but some of these positions still look really good lower. Short, stop. ACHR. Really like the weekly chart too on the ACHR. See it? It's beautiful. It's a 1, 2, 3, 4 pattern. AVAH is a daily base breakdown. It's not very tight, the base at the bottom, but short under, stop above. Okay, on the AVAH. BWV, wow, I mean this thing is going to zero, likely dropped from about $65 to to $5, and it still looks lower. Looks good. Under Thursday's low, which is 475. Stop, I'd give it to about 750. Tell you the truth, I'd give it some room. It's probably very wild. I don't think I've ever traded the stock before, but it still looks lower. CLVT, we have a position. I have a position in swing open CFLT. That's the symbol. I'm trying to think of it. Swing short. It was actually in last week's video. I told you about it. I said I love that sell setup plus the 1, 2, 3. Well, it triggered, and so the CLVT is similar on the weekly chart. Even prettier, but it's also stronger. So when you're shorting something, you want it to be as weak as possible. The CFLT is weaker than the CLVT, but it looks good. Short under 1579, stop under over 1751. So it's a big stop. Target the prior low. Okay, looks beautiful, but again, a little bit stronger than the CFLT. The CZR looks good short under the SPAR's low, big stop. Stop right here and target right there. So give you the numbers real quick. Under $65, stop over 74, big stop, $9, and target. I don't know what the 200 MA is. It's about 50 something on the weekly chart. So it's about $50. No, actually this is 45. So would have two targets. I would say target 1 right here and target 2 right there, about $45 on the CZR. Okay, like it a lot on the weekly. EFX, back to the daily. EFX is a 1, 2, 3 on the daily chart. So short under the SPAR's low, 201.40, stop over 209 on the EFX. GENI is just a power downtrend on the daily chart. So short under the base, stop above it. Looks good. Nothing, nothing wrong about it. Looks great. A power downtrend is when you have, it's like what we had in the market on maybe even Friday, but for sure on Thursday. So again, I'm having to look at my keyboard because I'm using a new keyboard. It's when you have, when you have like a one directional trend at 45-degree angle, 20 above, and then all below the 200. So you see it for 2 days in a row, pretty much we had it. So this kind of a trend, never bet against it. You don't want to go short, don't. No problem. Never bet against it. The only time one can bet against it is when we have the drop and then it accelerates. It gets oversold. But as long as it's just grinding down, then absolutely never try to predict the bottom or bet against it, because it'll just continue on and on and on. The same to the upside also. When the market is in a tight uptrend, never bet against it. Never try to predict the top or short, basically. So that's what we have on the similar, is what we have on the Genius, I guess, GENI. Just a power downtrend. Not as much momentum as the market had last week, but looks lower. HPP is like the plug. Remember I had plug in the video last week, 1, 2, 3 on the weekly chart or so. There it is. Unfortunately, it popped initially, so I actually took a loss on plug last week. But HPP, it hopefully doesn't pop, and it looks just as good as the plug. So short under 25.17, stop over 26.17. $1 stop. Target about here, 23.50, and maybe eventually to 22. KOD, look how tight that base is. It's really, really tight. Short under the base. Stop. The tightest stop would be over the hourly chart. So over 693. Okay? On the KOD, short, stop. Or above the daily base, which would be probably 725 on the KOD. Netflix could go either way. So Netflix possible long over 228, I would say. The SPAR's high, 227.68. Or short under the lows here. Short, stop, or vice versa. If it pops, it could also be a possible long, because big gaps generate either, if they set up as a fade, they can be played, or if they set up as a continuation, they can be played. So whichever way on the Netflix. I know Netflix is down a lot, but if we look at the monthly chart, it looks like it's gonna, because we broke under the support already, it looks like it's really eventually gonna hit that 200 MA, which is about 140, 150. Okay, for long-term investors, is it a good idea to start looking at Netflix as a long-term play? I think so. I think so. Could it break down still lower? Yes, because the market also looks like we're just at the start of a big sell-off, and Netflix did break under the prior lows by a little bit, by $15 so far about. So it would be nice if Netflix actually made it to the 200. Then I would know to buy it. Okay, but now if I buy it at 227, if let's say, or 228, if it takes it out, I'll be a little, I won't have the, you know, I won't hold it if it starts to go against me. But if it were to drop to 150, and then I would hold it as a long-term investment. So it would be nice to actually see Netflix drop some more, but we'll see. NSTG looks great. Triggered on Thursday, but still looks lower under Thursday's low, which is 1923, and I would say the stop would be over 2237. Is it at all-time low? It's not. Target is the prior lows, which is about, let's say, $17.50, $18 on the NSTG. PTGX similar, but didn't trigger, so this one looks pretty good. Short under the base, find the lowest point in that base, short under, stop above, and target the prior lows. As simple as that. Okay, so PTGX looks sloppy, but it looks really good. PTRA is like the GENI, but better. In my opinion, this is better. So I like it short under the base. Notice how it's power trending, sort of, and it's been basing the last couple months. If we look at the weekly chart, it looks even better on the weekly chart. The base is tighter. So where's the entry? Find the lowest point, 650, 652, but I'd give it to under 650, short under 650, and stop over $8, 802, and then go on vacation, because it has room all the way down to 150 or so. I mean, that's what I think. It has room to like $2 or so. So I like it long term. SFIX, Stitch Fix, also is a base breakdown. Slowed down considerably, meaning, you know, after a huge drop, when the stock finally slows down, probably not the time to short it. But look, it still looks lower. Am I not right? Still looks lower if it can break under the prior low, which is 875. Okay, stop would have to be over the base, which would be about, it's a big stop, 1150 or so. Okay, on the SFIX. SHLS is a 1, 2, 3 on the daily chart. I think I like the hourly chart more than the daily in this case. Short under the base, stop above it. So short under Thursday's low, which is 1017, stop over 1110. Okay, and then target, I think it might be at all-time low, in which case no target, just manage it. SNBR gap down and has a 1, 2, 3. This is similar to the EFX or something like that. EFX, very similar to the EFX. Probably I like it a little bit more because it double bottomed on the hourly. So the break of a double bottom, when it works, is bullish, but when a double bottom, the prices go up and then comes right back down, that's bearish. So the failure or the break of a double bottom is a bearish event, and so we did double bottom. So under the double bottom would be a good short. I like it. A stop would be over the SPARS high, which is 45.60 or so. Okay, on the SNBR. And last but not least is the VLDR, which is another one of those grindy stocks that are down a lot but still look lower. Okay, so I like it under about 195, 196. I'm not sure what the lowest point is. It's 196, looks like. Stop, I would say, over 230. Okay, so I know a lot of symbols, but there's quite a few good ones. If you're a subscriber to the Strategic Swing Trader, feel free to log on to your account, your T3 Live account, go to customer portal, go to subscription resources, and access the newsletter. It's already done and ready for you to take a look at it. If you want to participate, then the entry, the stop, the target for all the plays that I'm looking to do is already there for you. Or if you'd rather wait for the newsletter to hit your inbox, It shall do so on Monday by about 8 o'clock. Thank you so much for sticking around till the end. I know this was kind of a long video, but I appreciate you being here and sticking with me until the end. I hope you have a great rest of your weekend and have fun trading next week. Earnings season is upon us, so the environment should be a lot better going forward, at least for day trading. Okay, so take advantage, and I'll talk to you next week. Take care, everybody. Ciao.